So let's continue with residential status. So in residential status, there are three sections which are very important: 5, 6, and 9. Of course, there is another section called 7, demut to received in India. Getting it? Income received or demut to be received. That's not a big deal. Anyhow, so what is this particular residential status is all about? See, any SSE under income tax purpose, we classify them into two categories mainly: resident and non-resident. Especially if it is an individual or HUF, we classify them into three categories: resident and ordinarily resident, resident but not ordinarily resident, non-resident. Getting it? Now, depending upon their residential status, the income will be taxed accordingly. Now, how income is taxed depending upon the residential status, that point is covered in scope of total income. So in residential status, there is a point called scope of total income. Directly I'll open and then show you. Now, so like as I told you, broadly three categories: resident and ordinarily resident, not ordinarily resident, non-resident. Remember this word: resident, not ordinarily resident, resident but not ordinarily resident. This point is applicable only for individuals and HUF. This point is applicable only for individuals and HUF. For all other SSEs, company, partnership firm, local authority, society, for everybody, either they are resident or they are non-resident. That's it. If at all they are resident, we classify under this particular first part. If they are non-resident, third part. The middle part, this is only for whom? Individuals and HUF. Now, how to identify whether they are ordinarily resident or not ordinarily resident, non-resident? We'll discuss little a while later. Now, what is the impact of these residential statuses? Now, what it says: suppose if the income is accruing or arising or deemed to accrue or arise in India, nothing but if this is called source-based taxation, source-based principle. If the source of income is in India, for everybody it is taxable. Whether you are staying outside India or inside India, doesn't matter. Whether you are a resident in India or resident in US or resident outside India, doesn't matter. Are you having income? For that source is in India, accrual is in India, place of accrue is in India, that's it. Taxable for you under Indian income tax law. You have to compute total income and pay tax on that. Suppose the source is not in India. First, you apply source rule. Source is not in India. Second, apply receipt rule. Where you received it. Have you received that income in India? Received means first time income is coming under your control. Suppose no, you received amount, you are staying somewhere in London, you have a building at London, you rented that building to somebody, getting the point, and the other person paid rent in the London bank account which you have. That amount you later remitted to your parents in India. Now, where you received it? You received it in London only. First time when you get the control on the rent income in London itself. So receipt is in London, property situated in London, source is in London. So both the source and receipt both are outside, not taxable at all. So suppose if the receipt is in India, taxable in all the cases. An important thumb rule for a resident: if a person is classified as a resident, in case of individual and HUF, if a person is classified as ROR, resident and ordinarily resident, global income is taxable. Whether the income source is in India, receipt is in India, source is outside, receipt is outside, doesn't matter. Global income is taxable. Suppose if the source is outside India, receipt also outside India, both, still it is taxable even if that income is not received in India. For a resident company, for a resident partnership firm, for a resident LLP, for a resident and ordinary resident individual and HUF, global income is taxable. Global income. For a non-resident, income is taxable only if source is in India, it is taxable. Source is not in India. If receipt is in India, taxable. Suppose source is outside, receipt also outside. For a non-resident, nothing is taxable. For a non-resident, if source is outside, receipt is outside, fully exempted, not at all taxable under Indian income tax law. Getting it? Suppose for a resident but not ordinarily resident, for resident but not ordinarily, see, for non-resident and R and OR, for both of them the provision is mostly same. If source is in India, taxable. Receipt in India, taxable. If both are outside, not at all taxable. However, for R and OR only, even though if the business is outside India, even though if the profession is outside India, suppose if the business is controlled or set up from India, business is actually outside, but it is controlled from India. or the profession is outside India, but it is set up from India. What is profession set up in India? Simple. I'm a chartered accountant. I opened a branch office outside India. Now, though I opened a branch outside India, that's a CA firm. That particular profession has got validity through a CA degree provided in India. Profession set up from India. Getting the point? Still, it is taxable. Here, actually, business is outside. Profession is outside. You are receiving also, everything is outside. But that business is controlled from India. Profession is set up from India. Therefore, it is taxable for RNOR. Technically speaking, suppose if there's a non-resident, some non-resident is there, he attended India and pursued chartered accountancy course, got chartered accountancy certificate, everything. Let us assume for the sake of getting it. And he went abroad and settled there. Getting the point? Using this qualification, he started a profession and doing that. This is actually a profession that is set up from India. Through a qualification derived from India. Through a skill derived from India. Getting the point? Still not at all taxable. But for RNOR, if the profession is set up from India, business is controlled from India, then it is taxable. See, profession, business control, profession setup is nothing but branches, nothing but it's related to branches. Getting the point? Or it may be related to franchises. It may be related to franchisee businesses. Getting the point? So for RNOR. Remember, for resident and ordinary resident, global income is taxable. No, where is accrual, where is received, that and all, we don't see. Straight away it is taxable. For non-resident, source must be in India or receipt must be in India. For RNOR, same, source must be in India or receipt. If both are outside, not at all taxable. However, if it is from a business control from India, profession set up from India, then again taxable. So this is regarding scope of total income. Next. Now you see, the moment we see residential status, so we completed scope of total income. Now let us understand what is the residential status. How to determine residential status? Like scope of total income, we have seen resident, non-resident, ROR, RNOR, NR. We have seen how to identify them. So there is a section called section 6 in the income tax law. It says for individuals, there are two subsections, 6 subsection 1, 6 subsection 1A. This is talking about residential status of individual. For HUF, 6.2. For company, 6.3. For all others, 6 subsection 4. By the way, 6 subsection 1 and 6 subsection 6, both are there. Getting it? Then 6 subsection 1A. So these are the sections which are dealing with residential status of various SSEs. Now individuals, 6 subsection 1 and 6 subsection 6. So both put together one segment, 6.1A another segment. Now in the individual residential status only many students have confusion. Very simple. I will clear all that confusion in the next 5 minutes itself. I believe me, the kind of clarity that you get after listening to this next 5-10 minutes on individual residential status will be damn amazing. Now, how to determine residential status of an individual? Very simple. They have given basic conditions. 2 basic conditions were there. What we need to check? First basic condition. Suppose we are talking about previous year 22-23, nothing but assessment year 23-24. So for previous year 22-23, whether the individual is a resident or non-resident or not ordinarily resident, we want to check out. How to check out? Very simple. In the relevant previous year, suppose if the individual stayed for 182 days or more, 182 days or more in relevant previous year. Now, what do you mean by relevant previous year? Suppose we are checking for 22-23, then 22-23 we should apply. If the individual stayed for 182 days or more in the relevant previous year, then B1 is satisfied. He is a resident. Is simply a resident. Resident, I'm not saying ROR. In order to identify ordinarily resident, see, he is resident in this year. In the past also he is a resident. Then he is a resident and ordinarily resident. He is a resident in this year. In this year he is staying. In the past he has not stayed in India. Means he is a resident in this year. Ordinarily is he a resident? No. Ordinarily means about past years we should check. Current residential status, first you must be resident in current year. Then only we can think of whether are you ordinarily resident or not ordinarily resident, depending upon your past year's stay. No, first current year. Current year, are you resident or not? We are checking. Basic condition 1. In the current year, in the relevant year, if you stayed for 182 days or more, you are a resident. Suppose you did not stay for 182 days. 182 days you did not stay. Then condition B2, another option is there. Okay. You have not stayed 182 days or more in the relevant year? No. Okay, then we check B2. Have you stayed at least 60 days or more in the current year? If at all you stayed 60 days or more in the relevant previous year and 365 days or more, 365 days or more in past 4 years, preceding relevant previous year. Suppose I'm checking for 20 to 23. Are you, sir, I'm an individual, I just came from abroad, I'm a resident. Did I stay? Have you stayed in the 20 to 23 for 182 days? Need not be continuous. You can stay, you stayed 50 days, again went back, again you came back and stayed another 50 days, again went back, you came back, again stayed 90 days, totally 50 plus 90, 190. You are resident. You have not stayed for 182, then we will check B2. If B1 is failed, then only we will check B2. As per that, in the current year, in the relevant year, have you stayed for 60 or more? Yes. Before 20 to 23, last 4 years, 21, 22, 20, 21, 19, 20, 18, 19. In these 4 years put together, have you stayed for totally 365 days or more put together in all the 4 years? Yes. Then B2 is satisfied. You are a resident. So in order to become a resident, either B1 should be satisfied or B2 should be satisfied. Sir, B1 or B2, something is satisfied, sir. I am a resident, sir. Global income taxable for me? No. We should check ordinarily residential status also. Ordinarily status means what? Past year stay. So additional conditions, A1 and A2. There are 2 more. If both the additional conditions are satisfied, if both of these additional conditions are satisfied, you are a resident and ordinarily resident. If you are an ordinarily resident, what happens? Global income is taxable. If you are not an ordinarily resident, what happens? Only sources in India taxable, receipt in India is taxable, business controlled, business outside, profession outside, but controlled from India, that is only taxable if you are R and OR. If you are a non-resident, sources in India taxable, receipt in India taxable, that's it, no more question. So whether are you ordinarily resident or not, we should check 2 more additional conditions. If both are satisfied, then you are an ordinarily resident. Wait, in the book that you might have studied, there might be 4 additional conditions where the condition is OR. I will come back and tell you later. First, focus on this, understand. Suppose for 2 years, in last 10 years, ignore 20 to 23. We are checking for 20 to 23. Ignore that. Ignoring this, last 10 years, for any 2 years, at least 2 years, are you resident? At least 2 years are you resident means what? Apply B1 and B2. Out of last 10 years, in the last 10 years, B1, B2 both you apply for every year. Either B1 or B2. Something is satisfied in the last 10 years. Getting the point? For any 2 years, basic condition is satisfied. That's it. You are a resident. Getting the point? A1 is satisfied. For any 2 years in the last 10 years, if you satisfy for any 2 years in the last 10 years, if you satisfy basic condition, you are a resident and A1 is satisfied. Getting it? Now, A2, in the last 7 years, in the last 7 years, means ignore 20 to 23. We are checking for 20 to 23. Ignore that. Before that, 7 years, 730 days or more. You stayed for 730 days or more in the past 7 years put together in India. You were in India for 730 days or more in the past 7 years. Getting it? Then A2 is satisfied. Suppose B1 or B2, any one is satisfied. A1 and A2 both are satisfied. You are resident and ordinarily resident. You are what? Resident and ordinarily resident. Now these additional conditions under 6 subsection 6 were expressed in different way. What is the different way? I will discuss little while later. I hope until now you understood. Now B1 182 days criteria, B2 60 plus 365 days criteria, A1 2 out of 10 you must be resident, plus A2, here it is R, A2 730 days criteria in 7 years. Getting it? So that's it. These are the criteria. Now if B1 or B2, any one satisfied, you are a resident. A1 and A2 both are satisfied, you are a resident and ordinary resident. Suppose you satisfied either B1 or B2 only, so you are a resident. But A1 is not satisfied, A2 is also not satisfied. You are just a resident but not ordinarily resident. Suppose B1 not satisfied, B2 also not satisfied. You are a non-resident. Basic condition itself you didn't satisfy, you are a non-resident. If basic condition is satisfied, but additional condition one failed, R and OR. If additional both are satisfied, ROR. That's the logic. Now what you have to do is just once again listen the past 10 minutes clearly. Okay. Now let's go further. Now there are 3 cases: Indian citizen, leaving India. Leaving India for employment means he want to go abroad and settle there, either for job or business, whatever. For some work, he is leaving India. He is leaving India permanently. Indian citizen working as a crew in foreign bound ship. Foreign bound ship means that ship, it travels from India to abroad and abroad to India. That's called foreign bound ship. Okay, fine. So Indian citizen who works as a crew. Now remember, in both the cases, the word used is Indian citizen. Third one, Indian citizen or person of Indian origin. Third case, person of Indian origin. Indian citizen, person of Indian origin, visiting India. Visiting means what? They might have taken a visitor visa and they'll come to India. Visiting, just for visiting, not for permanent settlement. They'll visit and again leave. Getting it? In all these three cases, in B2, 60 days logic is there, right? Instead of 60, we apply 180 days logic. Generally, they say B2 condition do not apply. It's not do not apply. The section says, in all these three cases, if an Indian citizen is leaving India, or an Indian citizen is working as a crew member in a foreign bound ship, or an Indian citizen or a person of Indian origin who settled outside visiting India, in all these three cases, in condition B2 also, we apply 182 days logic only. We apply what? 182 days logic only. That's what indirectly what they tell. B2 don't check. Directly B1 you check. In B1 also 182 days logic. In B2 also 182 in the current year plus 365 or in the last 4 years. Instead of that, check B1. If B1 is satisfied, that's it, over. B2, why you should check again? For clarity. If you stayed for 182 in the current year, that's enough. No, you are a resident. If at all 182 is not satisfied, 60 days you stayed in current year, 365 in the past 4 years, you are a resident. Now in these three cases, case 1, case 2, case 3, in these three cases, instead of 60 days, apply 182. Means B2 also 182 days criteria only. B1 is 182 days criteria. B2 also 182. So why? That's what they express is what? How they express it in the study material of ICA. B2 will not apply. Simply they say like that. Now here, now 60 days will be substituted with 182, right? Now, suppose you are an Indian citizen or person of Indian origin, visiting India. You are visiting India and having income from India, excluding foreign sources. Indian income, nothing but having Indian source income, excluding foreign source, having Indian source income, exceeding 15 lakh. You are an Indian citizen, or you are a person of Indian origin. You are visiting India. Remember, you are visiting India, which means whatever is given in this third category, that category, the third criteria, case number 3, relating to them, they're talking. You are Indian citizen or person of Indian origin, you are visiting India, and you know what? You are having more than 15 lakh Indian income. Indian income means what? Excluding foreign sources. If the place of accrual of income is not in India, if the place of accrual of income is in India, or if it's a business controlled from India or profession set up from India, only that is considered. If that income is exceeding 15 lakhs, then not even 182, 120 days logic will apply. What will apply? 120. See, B2 condition originally 60 days. For case 1, case 2, case 3, what is the logic? 182 days. B2, I am talking only about condition B2. For case 3, if having Indian source income, if case 3, Indian source income exceeding 15 lakh, then not even 182, then just 120. So 60 days or more plus 365 days or more in the past 4 years. 182 days or more in the current year plus 365 days or more in the past 4 years. 120 days in the current year, 365 days or more in the past 4 years. That's the logic. So now this is what many students confuse. Very simple. Once again, let me revise it once again. So you are an individual. In the current year, you stayed for 182 days. That's it, you are a resident. B2, no need to check. Directly go for additional condition A1. 2 out of last 10 years you are a resident. Satisfied. A2, Out of 7 years in the last, out of last 7 years, you stayed 730 days or more. You are A2 also satisfied. B1 satisfied, A1 and A2 both are satisfied. You are a resident and ordinarily resident. Suppose B1 is not satisfied, then we check B2. As per B2, what is the original condition? 60 days in the current year, 365 days in the past 4 years. Yes, you are a resident. Now, this B2, in B2, instead of 60 days, we check 182 for these three cases. For these three cases only, in B2 also we apply 182. Which case is? Case number 1, Indian citizen leaving India for employment. Case number 2, Indian citizen working as a crew member in the ship. Case number 3, Indian citizen, Indian origin, both are covered. Indian citizen means if you are born in India, you are an Indian citizen. Indian origin means what? You were not born in India, you born abroad. But your parents or grandparents, no, they were born in India. Means you have Indian origin. For you, the roots is in India. That's called Indian origin. So Indian citizen or person of Indian origin, if visiting India, for them, instead of 60 days logic, 182 days only we apply. And past 4 years, 365 or more, whatever. Now, suppose this case 3, another exception is there. Suppose if you are an Indian citizen or person of Indian origin, remember, Indian origin is also covered. You are visiting India. You are visiting India. And you are having Indian sources more than 15 lakh. Income from Indian sources more than 15 lakh. Then instead of 182, we apply 120 days logic. We apply 120. Indirectly, for category 3 people, those who are visiting India, getting it? If at all they stayed in India for 120 days or more and 365 or more in the last 4 years, getting it? They are residents. They are resident. Provided the Indian source income is exceeding 15 lakh. This is the rule. Now, this point many students confuse with 6 subsection 1A deemed resident provision. Fine. So, are you clear with B2? In condition B2, by default it is 60 days. This 60 days logic will not apply. 182 will apply for these 3 cases. Again, if case number 3, if at all they are having Indian source income more than 50 lakh, then 120. Generally, for case number 3, if at all you are a person visiting India normally, 182 days only we will check. Then only you are a resident. Otherwise, you are not a resident. Suppose if you are having 15 lakh or more, 15 lakh, more than 15 lakh income, Indian source income, then not 182, 120 we will check. If at all you are in India for 120 days or more, you are a resident. That's it. You clear? So through this particular point, more people who settled abroad and visiting India, getting it, having Indian source income, we are bringing into residential status in India and taxing more and more income on them. Just a minute. Next. Now there is a provision called deemed resident, 6 subsection 1A. 6 subsection 1A. What is deemed resident? First of all, as per 6 subsection 1 and 6 subsection 6, you are not a resident. You are not a resident. Just I told you B1, B2, A1, A2, nothing is satisfied. You are not a resident at all. But you are an Indian citizen, not Indian origin. Indian origin point is not covered in 6.1a. In 6.1a, Indian origin point is not covered. Remember, this question has been asked in May 23 exam also. Similar question, 6.1a related, 6.1 related, both put together. They developed a question and asked in May 23. And even in November 23, there is a chance that they will ask, very important, MCQ or direct problematic question. Anything might come. Suppose you are an Indian citizen, but you are not a resident as per B1 and B2. Both are not satisfied by you. You means you are not in India for 182 days. 60 days logic also, everything failed. You are not a resident. Basically, as per 6 subsection 1, you are a non-resident. You are a non-resident as per 6 subsection 1. For you, we apply this. And moreover, what? You are an Indian citizen. You are an Indian citizen, not a foreign citizen. You are an Indian citizen but settled abroad. But you did not satisfy 182 days logic, 60 days logic, both you have not satisfied. For you, we will check 6.1a. What is 6.1a? As per 6.1a, if you are an Indian citizen and you are having Indian source income, you are having Indian source income of more than 15 lakh. Exceeding 15 lakh, you are having Indian income. Source of income is in India, not outside, foreign source, not a foreign source. If your total income, excluding foreign sources, is exceeding 15 lakh, that's what the provision says. If the total income of an Indian citizen, excluding foreign sources, is exceeding 15 lakh, and you are not liable to tax, you are not liable to tax in other countries, other territories, other domicile. Getting it? In other countries, you are not liable to tax. You are completely exempted from income tax outside India. And you are having Indian income, Indian source income exceeding 15 lakh, and you are an Indian citizen. You are deemed to be a resident. You are deemed to be a resident. So through this section, the income tax department is taxing Indian citizens even though they are not visiting India. You see here in 61A, they don't talk about any number of days, 120 days, 180 days, 60 days, nothing. Are you Indian citizen? Yes. Are you exempted from tax outside India? Yes. Are you having Indian source income? Yes. Is it more than 15 lakhs? Yes. You are a deemed resident. You are a deemed resident. You are a deemed resident under 61A. You are a deemed resident under 61A. Now summary. So an individual, is he resident in India or not? That's the question. Basic condition 1, 180 days or more in the current year, resident. Suppose basic condition 1 failed. Basic condition 2, 60 days or more in the current year and 365 days or more in the past 4 years. Yes, resident. Check additional condition 1, additional condition 2. 2 out of past 10 years, are you resident? Yes. 730 days or more out of past 7 years you stayed in India? Yes, you are ROR. Now, you are an Indian citizen living in India. You are an Indian citizen working as a crew member in ship. You are an Indian citizen or Indian origin settled outside India but visiting India. If you fall under any of these 3 cases, B2 condition is there, no? In that 60 days criteria is there, no? Instead of 60, 182 we check. Now, case number 3, Indian citizen, Indian origin, visiting India, no. And if he is having Indian source income of 15 lakhs, exceeding 15 lakh, no. Then for him, in B2, 60 days, 182, both will not apply. 120 we will check there. Suppose B1, B2, both are not satisfied. You are not a resident. Then check 61A. See, don't conclude a person is non-resident. If at all B1, B2, both are failed, don't conclude that he is a non-resident. Check 61A. Is he Indian citizen? Remember, under 61A, Indian origin is not covered. Only Indian citizen is covered. Under 6 subsection 1A, Indian citizen is only covered. If an Indian citizen is there, here number of days and all not required. If at all he is having total income, excluding foreign sources, nothing but Indian sources, exceeding 15 lakh and not chargeable to tax under outside India, he is a deemed resident in India. Now, a person who is a deemed resident under 6 subsection 1A and a person who satisfies condition B2 because of 120 days criteria, because of 120 days criteria, if a person satisfies B2 or 61A provision deemed resident, these people are always RNOR, resident but not ordinarily resident. Sir, I told deemed resident, na, is he ROR or RNOR? He is always RNOR. Suppose if a person satisfies condition B2, if a person satisfies condition B2, A1 and A2, all are satisfied. In B2, 120 days logic only satisfied. Getting the point? The person is 15 lakhs or more. Because of that only B2 is satisfied. Getting not 182 logic. Not 182 logic. 120 days logic. Through that he satisfied B2. Then he is a resident but not ordinarily resident. So that's why you see 6 subsection 6 residential status. The following people are always not ordinarily resident. 9 out of 10 years they are non-residents. In the last 7 years they stayed less than 730 days. They are a deemed resident. They are a resident in India because of 120 days logic, having Indian income exceeding 15 lakhs. In all these 4 cases, they are always RNOR. That's how they drafted. And in fact, we have given the same format in the book, in our book also. In our book also, we have given in the same format. Additional conditions for individuals for deciding ordinarily residential status. I hope you are confident now. If not, once again listen, you will get crystal clear clarity. When 60 days we apply, when 182 we apply, when 60 days we apply, 120 we apply in B2. In B1 it is always 182. In B2, 60 days normally. 182 for 3 cases. 120 for 3rd case, having Indian income more than 15 lakhs. Simple, over. Suppose B1, B2 both are not satisfied. 61A, having Indian source income exceeding 15 lakh. Are you Indian citizen? Not taxable anywhere outside India? That's it. You are a deemed resident. Over. Now, so with this, individual related residential status is completed. Individual related residential status is completed. Now, so with this, individual residential status is completed. Now, HUF. Now, is HUF resident or non-resident or resident and ordinarily resident or not ordinarily resident? How to decide? For HUF, there is only one basic condition. If control and management are partly in India, if control and management is partly in India, that's it, HUF is a resident. If control and management 100% outside India, if control and management are 100% outside, For the HUF, entire control and management, entire decisions are taken outside India. 100%, not even one decision, 100% outside India, HUF is operated. Non-resident. Sir, suppose some decisions are taken in India. Control and management is partly in India. It's a resident. Now, is it ordinarily resident or not ordinarily resident? We should check A1 and A2 for Karta. Karta has to satisfy A1 and A2 both. If Karta satisfied both A1 and A2, then HUF will be a resident and ordinarily resident. If Karta satisfies both A1 and A2, HUF will be resident and ordinarily resident. So A1 and A2 we check for Karta. If Karta satisfies both A1 and A2, HUF can be ordinarily resident. And remember, just because Karta satisfied A1 and A2, Karta is also an individual, right? He may not be ROR. Karta, no, B1, B2 both are not satisfied. Karta is a non-resident, but A1, A2 is satisfied. HUF satisfied basic condition. So HUF will be ROR. Clear? Next. So with this, HUF is over. Now others, not companies. Companies I'll cover little while later. Others means firms, LLP, society, nothing but other than individual, other than HUF, other than company, any other SSE. How to determine residential status for them? For all others, how to determine residential status? So just a minute. If control and management partly in India, it's a resident. 100% control and management outside India, it's a non-resident. Simple, over. This is applicable for LLP, partnership firm, AOP, local authority, artificial judicial person, for all of them. This is the residential status. 6 subsection 4. Fine. Now 6 subsection 3. How to decide residential status for companies? How to decide residential status for companies? Now, companies are broadly 2 types: Indian companies and other companies. Indian company, always a resident. Always a resident. What is it? What is an Indian company? A company which has registered, incorporated under Companies Act 2013, Companies Act 1956, or erstwhile, whatever previous act. They are all Indian companies. They are always resident. Other companies, if POEM is in India, if POEM, place of effective management in India, they are resident. If place of effective management outside India, they are non-resident. Simple, that's it. So for Indian company, it's always resident. For remaining companies, where is place of effective management? In substance, where the decisions are taken majorly. If it is in India, then it's a resident. That foreign company will become a resident in India. If effective management is outside India, in substance, majority decisions are taken outside India, then it's a non-resident. As simple as such. So if POEM is in India, it's a resident. POEM is outside India, it's a non-resident. Over. That's it. Residential status is almost completed. Now we still have to discuss. Now whatever the points I have told, everything is covered here. Everything is covered here. So for a crew member, how to decide residential status. For a crew member, 180 days logic only we apply. Only if the crew member of Indian ship, he stayed in India, getting it for 180 days, then only he is a resident. A person leaving India, he stayed in India for 180 days, then only he is a resident. A person who is visiting India, 180 days he must stay, then only he is in India. But suppose if the person visiting India, having Indian income more than 15 lakh, then for him, 120 days logic also we apply. Then he may become resident as per that also. Right. Now, for a crew member, CDC period we will exclude. CDC period, continuous discharge certificate, that period, we will treat it as outside India stay. So total 365 minus CDC period is equal to what is the balance number? If it is 182 or more, then is a resident. Otherwise, is a non-resident. Remember, the crew member must be Indian citizen. Then 61A, that is also given here completely. HUF, I already told. For AOP, firm, BOA, company, and any other persons, artificial judicial person, all that, everything is covered. Scope of total income I have covered. So income accrue or deemed to accrue or erase in India. In this, many students have doubts on the interest, royalty, and technical services. Many students have doubt on the interest, royalty. Suppose if any dividend is paid by Indian company, you are a foreigner, dividend is paid by Indian company. It's a source of income is in India. So it's a income deemed to accrue or erase in India. If it is salary paid by government, though you are working outside, but salary is paid by Indian government, it's a source of income is in India. Accrual is in India. Now interest income. Suppose an interest income, you are earning interest. You are actually a non-resident. You are a non-resident. You are staying somewhere abroad. Now you gave some loan to Indian government. The Indian government is paying interest. Now, where is the source of income? Accrual of income. Accrual of income is from the Indian government. So, source of income is in India. So, that interest is deemed to accrue or arise in India. Accordingly, source is in India. It is taxable. Whether you are a non-resident or resident doesn't matter. Suppose you are a non-resident. I am a non-resident. I am getting interest income. From whom? From a person resident in India. Okay, a person who is residing in India, no, he is paying me interest. Getting it? So, I gave a loan. He is paying me interest. Now, will that be treated as Indian income? Source of income is in India? Straight away, no. Let us look at what are they saying. Suppose no, I am a non-resident. I'm not staying in India, but I gave a loan to my friend who is in India. He is paying me interest. You know what? Whatever loan I gave no to him, he is investing outside India completely. He did not even take in his India. He completely invested that outside India for business, profession, whatever. He is not using it in India. He is using it everywhere outside India. Suppose I am staying in Canada. My friend is there in India. I gave a loan to him. He is paying me interest. He is staying in India. He is a resident in India, first of all. As per section 6, he is a resident. This fellow paying me interest income. Technically, what we assume, since resident person is paying interest to me, source is in India, like that we assume. But not. This fellow, whatever loan I gave him, he invested that in London. So in London, he purchased some property or some business. He invested there completely. So from that business, he is getting profit. Out of that, he is paying me interest, which means I am getting interest income from the business where he invested in London. Source is not in India. So where the interest is payable in respect of debt, which is used for the purpose of business, which is outside India, or for any other source outside India, it is not deemed to accrue or arise in India. It is not treated as Indian income. Getting it? I know resident person only paying. He is a resident in India, he is only paying interest on loan. But that is not. That interest income which is received by lender, that is not treated as source of income in India. If that entire loan is invested outside India, that entire loan is used for business or some other purpose outside India. That's the point. Next, suppose, sir, I am a non-resident, I am staying in Canada, sir. And I have another person who is also in Canada, my friend. I gave a loan to him. And what you know? That loan, this fellow invested in India. This fellow invested the entire loan in India for doing business or profession or for some other activity. Getting it? Sorry, for doing business or profession, only business or profession. So I gave a loan to my friend who is in Canada. I am staying in Canada. I am a non-resident. He is also non-resident from Indian point of view. Getting it? This fellow, I gave a loan, right? This fellow took that loan and invested in India, PGBP, business or profession. Now, whatever interest I am getting from my friend, no, deemed to accrue or arise in India. Suppose if a person who is a non-resident, this fellow is paying, interest, getting it, where the loan is used for the purpose of business carried on by him, business or profession carried on by him. Getting the point? So, if a non-resident is paying interest to another non-resident, the interest received by a non-resident is deemed to accrue or arise in India if it is used for business or profession in India. Exception. Suppose if the interest borrowed by a non-resident for any purpose in India other than business or profession, that is not deemed to accrue or arise in India. Very simple. So I gave a loan. I'm a Canadian citizen. So I'm a non-resident. Mr. Ram is a non-resident. He's staying in Canada. Getting it? He gave a loan. To, Hanuman, example. Getting it? This fellow is also staying in Canada. Both are non-resident. But Hanuman, no, whatever the loan he took, no, he invested in India. He invested in business or profession in India. Now, whatever interest he is paying me, whatever interest Ram is receiving, no, that is deemed to accrue or arise in India. Suppose, no, Hanuman invested this entire loan in some other business, not in India, but outside India. That is not accrue or arise in India. Suppose Hanuman invested this particular amount in shares of a company for getting dividend income. Now, shares of a company dividend income means for Hanuman, is it a business income? No. If a non-resident gave a loan to another non-resident, that non-resident who received the loan invested in business or a profession in India, then only interest on that loan is deemed to accrue or arise in India. Suppose if a non-resident invested that loan in not a business, some other head of income only he is getting, that is not deemed to accrue or arise in India. Next, same way, royalty also. Similarly, royalty. Suppose if the royalty is received from government of India, always source of income is in India. If a royalty is received from a resident person in India, source is in India. However, exception. Suppose I'm receiving royalty from a resident Indian, but that Indian paying me royalty in respect of services used for a business or profession outside India. Whatever service I provided, no, for which is giving royalty, that service is used outside India, business or profession or some other source. Then that income is not deemed to accrue or arise in India. Where it is payable in respect of transfer of any right or use of any property for utilization of any service, for business or profession outside India or for purpose of earning any income outside India. Simple, I am getting royalty for some service I rendered. This service is used where? Outside India. Whatever income I am getting, royalty, fully, this is not treated as accrue or arise in India. This is not treated as deemed to accrue or arise in India. Suppose I am receiving royalty from non-resident. I'm a non-resident and another non-resident is paying me royalty. So both of us are non-residents, example. So a non-resident is paying me royalty. This is not deemed to accrue or arise in India. However, the royalty which I'm receiving, no, from a non-resident, I'm rendering that service. Whatever service I'm rendering, no, that is used for business in India or that is used for some other profession or some other activity in India. Means whoever is the person who is paying me royalty, he is paying me royalty by using my services for some source of income in India. It may be business or non-business, doesn't matter. For some source of income in India, getting it. Whatever service I render, he is using that and paying me royalty. Means Indian origin is there, no. Indian connection is there, no, for my income. It is deemed to accrue or arise in India. Technical service also exactly same. If I am getting any fees for providing technical services from Government of India, sources in India, taxable. If I am getting from a person resident in India for using for business in India or any source in India, it's a deemed to accrue or arise. Suppose if I am getting fees for technical services from a resident in India for services which I provided, which are used completely outside India, then it is not deemed to accrue or arise in India. Suppose I am getting fees from a non-resident for technical services. These services are used in India, business or profession, or in India for some other income. Then again, it is deemed to accrue or arise in India. In all these three cases, royalty, technical services, interest, in all the cases, common point is very simple. Are you getting it from government? It is always deemed to accrue or arise in India. Are you getting it from somebody else? Yes. If you are getting from somebody else, maybe resident in India or non-resident, doesn't matter. If it is used for business or profession in India, if it is used for some other activity in India, that's it. It's accrued in India. Only for interest income, if the business is in India, then only interest income received from non-resident is taxable. If it is for some other purpose, I gave a loan and it is invested for non-business activity in India. Getting the point? Whatever interest on that, that is not deemed to accrue or arise in India. That's a loophole in drafting. Very simple. That's a loophole in drafting. That too for non-resident only, all this logic will apply. So here we have given an example also. Getting it? That's it. If at all you have not at all studied this section and right now you did not understand fully, properly, ignore it. No, don't even read this. Only you already analyzed this section. Somewhere you're having little doubt, then listen to this. Past 15-20 minutes, whatever I have covered, the section 9 related, listen to it once again. That's it. With this, residential status is completed. Entire crux, confusion part in residential status completed. That's it. Take care. So the next chapter of what I'll upload is house property. That next salary, that next PGBP, that next capital gain. That next I'll upload clubbing, setup and carry forward chapter 6A. Getting it? So that next, depending upon my energy and my time, all the tedious topic I'll upload. That's it.